We just try to find the best ways we can help individuals begin or level up in their real estate investment
If
goals.
there's people having a land sitting for years, there is a solution, there is a way that they can start building their dream home.
The general contractor is the secret sauce, believe it or not.
It's not about the money, it's not about the time, it's a structure, and it's about the right people. Hello, everybody. My name is Jose from JC Journal Constructions, and thank you for being here today with us in another episode of the JC Constructions. Today, I'm very happy to sit down with Yolanda Rice from Royal Diadem. Yolanda is a funding consultant. This means she works with many lenders, not only one bank. She helps people to find the right loan program based on the project, no one side, single rules. In today's conversation, we're going to talk about new construction financial, and we'll explain how lender thinks and what people should understand before they try to fund a new construction project. Yolanda, thank you so much for being here today.
Thank you, Jose. I appreciate being here. I look forward to talking about new construction opportunities. The game has changed tremendously compared to what it used to be a few years back. And I think that there are some opening doors that we've not seen before that are great for customers to take a part in today.
That's correct. Before we get started into the new construction and talk about loans, please, Yolanda, tell me, what do you do, who you work with, and what you're focused on today?
Okay, great. Thank you, Jose, for asking. As Jose mentioned earlier, I am a funding consultant, and the preference for that title over a broker is that I work in many aspects of funding to assist customers in developing their projects. I come with over 20 years experience of financing in the hard money and private money lending space. I also am a mortgage loan originator and can finance traditional financing under FHA, USDA, and VA. I also am a licensed insurance agent, and I am also an investor. And I
Yeah.
facilitate with investing for investors that come to the state of Illinois to put their feet on the ground, and they look for partnerships to do that. I support investors in the Chicago area in obtaining their financing so that they can level up and expand their development goals and their expansion goals. It's a very vibrant and exciting market to be in, and there's great
Yes.
opportunity available for those who are first starting out, along with those that are seasoned investors.
Yes, and actually, that's the way that we met each other, right? So we both are investors. So we have one meeting and one this networking. So we met that time and we built an amazing relationship. And now we both have been helping people, to get the funds for their projects. And that's amazing work because you are a key role on any construction. So Yolanda, before we go even deeper, I want to ask you something very important question to you. When
Okay.
someone's reached to you, what does how it looks like your ideal client? What do you expect a client when he comes to you?
For new construction or just a client in
In
general?
general,
In
an
general, okay.
investor, a homeowner, what do you expect from them?
Sure. So when we look at a new client, we look at a client from a relationship building perspective, not from can I do your loan for you. We look at it on how can we work with that customer, that borrower, that investor in more than one way in achieving their goals. So when we
Yes.
look at an investor, we look at not just their credit score, not just what they may have in the bank, and not just what they may have as experience under their belt, but we look at what is their vision, what is their long-term goal, along with their short-term goal, so that their short-term goal is a catalyst and an expansion of their long-term goals that they seek to pursue. So we do look at credit score. We have a sweet spot for a credit score, but we're not limited to credit score and working with
Mm-hmm.
customers. We have some lenders in our diverse cadre of lenders that work with individuals, and credit score is not as relevant as it
Mm-hmm.
may be in other situations. And so scores are looked at 600, and some
Mm-hmm.
I've seen scores looked at 580. But when you get into a lower score scenario, you are going to see yourself required to come with a larger down payment compared to someone who's a
Yes.
700, 800 credit score.
Yes.
So we
And
don't
that.
turn our back on anybody. We just try to find the best ways we can help individuals begin or
Mm-hmm.
level up in their real estate investment goals.
Yeah, and like both, we are a service company that basically we are treating people like the way we expect, right? We're trying to solve the problem every one project at a time. So
Yes.
basically, we trying to help them as many aspects we can, and we wanna, your goal is to provide the funding. The goal in construction is make the project happen. So the focus we both have, and that's why we have a great relationship, because we share the same values. So that's
Mhm.
amazing. Before we continue, I just want to say thank you for watching. If this video is helpful, feel free to share it with someone who may need it. You can also subscribe, like the video, and turn on the notification. It really helps the channels and allow us to keep making videos like this. Okay, let's go back to the video. So, in connecting for what you say, like you are looking for, some credit score, they're close to 590, 620. So this is something very important, very good point to talk right now. So most people think there's only one side of the lending, because they know only conventional loans, conventional
Mhm.
rules, like from traditional banks, let's say Loan Depot, guarantee rate, and there are so many on the market. These loans are common. People know they buy the homes to live in, but the word that you are, Yolanda, it's kind of a little bit different. So you
Mhm.
are more in the commercial lending. So
Mhm.
tell me, what's the difference between commercial lending, that's what you're doing, and conventional lending? So what's the difference in those two
Okay,
words?
I would be glad to tell you the difference. Now, in the traditional lending space, under an FHA, USDA product, you can go as low as a 580, 600 credit score.
Mm-hmm.
However, in the traditional background and traditional requirements, you are going to be required to come with tax returns for at least 2 years. You
Mm-hmm.
are going to have to be able to show that you are generating an income on a regular basis, like that you have a 9 to 5 job, or that in your self employment you are
Mm-hmm.
cash flowing at a very consistent, solid amount of money in order to qualify in the traditional space for financing.
Mm-hmm.
In addition to that, traditional financing will often ask for more in the way of a down payment, whereas in the commercial space, sometimes depending on credit score and experience, you are able
Mm-hmm.
to get a higher LTV. So
Mm-hmm.
those are some significant differences that we see between the two products. I think the other significant thing that you would find the difference between traditional financing and commercial lending is that commercial lending is tied to the LLC and the corporation. And so
Mm-hmm.
all of its accreditation and credit reporting is all tied to the LLC and not to the individual. So if
And
you are an individual that is
mm-hmm.
desiring to be a real estate investor, but you are starting out and just buying your first home, and you want to go out and do real estate, but you don't have a ton of capital to do real estate, but you would
Mm-hmm.
like to get started in real estate and you start small, you would probably
Yes.
be able to begin so. But in the traditional banking world, you would probably be challenged in taking that next leap and that next step after
Mm-hmm.
buying your primary residence and going into buying investment property if you don't meet debt to credit ratios, because
Mm-hmm.
anything that you do in the traditional space is going to be reported on your credit report. In the
Yes.
commercial lending space, because that financing is tied to the LLC, it is
Mm-hmm.
not reported on your personal credit report. I have seen investors who have gone out and bought investment property using traditional lending and then went to go buy their primary home and was not able to do so because of
Mm-hmm.
their debt to credit ratio. Buying in the commercial lending space space does not impact your debt to credit ratio in terms of your personal objectives and your personal goals. It keeps business separated from personal and
Hmm.
personal separated from business.
Yes. So, Yolanda, you mentioned something very important. In conventional lending, they look at your income, your cash flow, and commercial loans or commercial lending. So they basically value the property amount, how what's
Exactly.
the asset that you're buying, and that
Yes.
basically will be your guarantee to access to the loans. There's
Yes.
another things there look at that we're going to discuss later, but in general, Yolanda, so most people, I think, they misunderstand that commercial loans typically are for big companies or typically is for buying business. But you clear explained today that regular people can use those loans, but right, they don't need to be a professional developer. They could be smalls, individuals. They're
Mm-hmm.
trying to
Exactly.
leverage their income and they're looking for start a real estate. That's amazing. That's why I really like commercial loans when you're trying to escalate your real estate portfolio.
Mm-hmm.
So now, Yolanda, let's talk
Yes.
about new construction. And the reason it's because we both have a client together, right? That we get an
Mm-hmm.
amazing term for these guys, and it's very
Yes.
important to explain the community like there's a way, is there's people having a land sitting for years, there is a
Mm-hmm.
solution, there is a way that they can start building their dream home or the property that's going to give you the cash flow they need. So
Mm-hmm.
by that saying, so no all loans are fit in the same. That's why you're amazing, because you find in the other in a lot of options there is in the market, you find which one
Yes.
fit perfect for one person.
Thank you.
So for a lender point of view, what make a new construction project different from the regular rehab or the regular fix and flip? What this is different?
Okay, so in the investment world and in the commercial lending world, the difference
Mm-hmm.
between a fix and flip and a new construction is that the fix and flip would be renovation of an existing property.
Mm-hmm.
Even if you're gutting down to the studs or if you're doing light renovation, that fits into the fix and flip bridge loan
Mm-hmm.
scenario and type of product. When you are building ground up construction, brand new facilities, that
Mm-hmm.
is considered new construction financing. There was a time that new construction financing would have not been offered to an investor if you didn't come as a builder
Mm-hmm.
already experienced in the industry seeking financing. But the game changed and they opened up the doors so
Mm-hmm.
that beginners, first time individuals with no experience in building, could get into this industry and could build their experience and become quote unquote builders per se, if they find that they like the new construction industry and it becomes their sweet spot. Um,
Mm-hmm.
the magnificent thing about new construction lending is that, as I mentioned, now they're offering that lending to individuals who have no experience.
Mm-hmm.
Typically,
Yes.
that industry requires that if you are seeking that kind of financing, you have to have at least three new builds in the past 3 years.
Yes.
So, what has taken place now is that there's a product out there for a
Mm-hmm.
no experience person in new construction. If
Mm-hmm.
they come with a general contractor that will do the building, and
Mm-hmm.
that general contractor has a build history of three or more new construction builds in the past 3 years.
Yes.
So we have some very interesting products that we are being allowed to use the experience of the general contractor. However, not
In
requiring
your
the general
favor.
contractor to
Mm.
go on the loan and be a part of the financing, whereas in the past, that was a requirement.
Yes. So, Yolanda, before someone's apply for these new construction loans, what is the best way to prepare for new construction project in from your lending perspective? So, how they
From
prepare? So
okay,
they
from
need
a
to get it.
from
So they, let's say they need to get the land first. They need to get the architect drawings,
yes.
or how they prepare. What a customer need to bring to you so you can qualify for a new construction loans.
Okay. Well, you don't have to already own the land. However, if you do own land, as Jose said earlier, you don't have to just sit on your land thinking, I don't have an experience as a builder, so I'm not going to be able to build anything on my land, or I have to hire someone else to build on my land. And how do I get that financed in order to have someone else build on my land? The first things that a lender wants to know is, one, do you own the property? And if you don't own the property, they're going to finance for you a certain percentage of your purchase price for the land for building. If you should decide that you are going to do this as a purchase, and you don't already own the land, then they will give you up to 70% of your purchase price for the land. If you already own the land, then they will give you up to 70% of your land
Wow.
value that will get applied towards your a credit towards your financing for the new construction.
And that
So
75 it
one,
will be give you
yes,
at the closing to you.
exactly. So you want to pick land, you want to understand your location, especially if you have goals where you're seeking to build and sell. You want to be able to know that you're in a market where you're going to be able to turn your new construction fairly quickly after the build, that you're going to get the kind of return that you would like to see after the build. So you should do your homework, and looking at, if I'm looking to build a 2 unit, a 3 unit, or a 1 unit, or a single family home, what are
Yes.
homes going for in that community, in that market that I'm desiring to build? What can I expect to possibly be my return on my investment? Meaning that's called your ARV, your after repair, or your aftermarket value. What is that property going to be worth once it is built? So those are some of the preliminary pieces of homework that you want to do, so that when you present your deal to a lender, you know that your numbers work, per se. In
Yes.
addition to knowing whether or not your numbers work, you should have an idea of what your build will cost. And in order to have an idea of what your build will cost, you need to have something in the way of preliminary plans, or some sort of a relationship with an architect where you've begun to talk about what is the cost associated with building a 2,500 square foot home, or what is the
Yes.
cost associated with building a 3 flat or a 4 flat building. Having an idea of those numbers, having an idea of those costs, looking at, once that build is completed, what kind of return is it going to bring, is all significant to the success of your deal. But
Yes.
definitely having an architect, having architectural plans and renderings will be also very important to achieving your goals and to having the whole process go smoothly. Now,
Yes.
whilst we are able to get some pretty great financing for clients, one thing a client should be prepared for, regardless of what kind of financing they receive, they should be able to have 15% of their reserves, 15% of their cost to build in reserves, and at least 6 months of their monthly mortgage payment in reserves, so that even though they may get financing that covers
Yes.
the majority of their costs, you want to be prepared to be able to start the build process and have the capital to start the build process, because you are refunded based on a draw system for the work that you put into the property. So you're going to have some initial capital to pay your general contractor. And with that being said, you need to have that kind of reserve. So getting excited about 90%, 100% financing is great. but
Hmm.
still yet you need to have the kind of reserve so that you are able to start your build process and keep the build process going fluidly, as you draw down for the work that gets done in stages.
Yes, it's amazing that you mentioned that because there's too many videos out there in YouTube, social media that basically say you don't need money. But I'm glad that someone with your expertise mentioned that you need to have a reserve to keep the project moving forward, right? Because someone have to put the money, even though the lender is gonna finance 90, 100%, they will do. They will have to get some reserve, to afford a project of that size. Another something very important that you mentioned, it's you need to have a team, and that's why we're in this
Mhm.
business, right? That's why we this business is all about relationship.
It
Because
is.
if you have the lands, you cannot no, someone cannot comes to you and say, I want to build a 4 unit buildings in a land that you only allow to do 2 units building, because it's not going to be approved. There's not going to be nowhere, it's no point to move forward. So
Yes.
I want to also mention, and because you say by the closing, they're gonna give you 75% of the loans, on the loan value is gonna be it's gonna be credit, or they're gonna give you, because the lender, it needs to be on of the land too, right? They will finance
Yes.
the construction, but it's impossible that they find the building, it's from it paid by the lender, but the land is yours. That's why they need to, let's say, it's like refinance the land, right? That's why they're doing that. So
Hmm.
Yolanda, let's talk now something very important. It's let's say the next, you are the key role, because without your work there's not going to be fundings to be able to take off a project. Now let's talk about the role of the general contractor from the lending perspective. I know we are general contractor, but I wanted you tell us basically why it is so important to have a general contractor that actually have the experience, that actually is an investor, and actually knows the process, right? This kind of thing,
Okay.
it's not like regular construction, like you're hiring someone to fix your home. This is a clear process. There is a lot of people involved. And Yolanda, what's the role of the general contractor in new construction loans approval? Because they play a key role for the term, right? So,
They
what's the
do.
role from the general contractor in this kind
Very,
of
very,
construction
very, very
loans?
key role does the general contractor play, especially if you are applying for a new construction loan and you have no build experience yourself. So
Hmm.
if you have no build experience, excuse me, I'm just going to close the door, Jose.
No, it's
Um,
okay. I'm gonna
if
make.
you have no build experience, you are required to have a general contractor that is very experienced, and that is
Hmm.
the key. The general contractor is the secret sauce, believe it or not,
Yes.
to the success of getting your project funded when you have no build experience. And we just completed an approval on behalf of a client, and the whole approval of the client was based on, largely was based on the general contractor's experience. So this
Hmm.
lender had tiers, levels that you would get your terms for financing. And your
Yes.
terms for financing, although yes, you still have to come with a credit score. Yes, you still have to come with some liquidity in the bank. However, the terms given to you in terms of LTV and interest rate were based on the experience of the general contractor. And
Hmm.
so, through the experience of JC Construction, we were
Hmm.
able to get a client what's called platinum tiered financing based on the proof that was provided of the experience of JC Construction. That
Hmm.
platinum level is the highest level of offerings that you could be made. They were given a 90% LTV.
Hmm.
With that 90% LTV, they were given a 9.25 interest rate, where my
Hmm.
other new construction lenders were somewhere between 11 and 12 in terms of their interest rate.
And this 9% is annually, right?
Yeah,
It's
yes,
annually. Yes.
yes. And so it is a 12-month loan for the
Hmm.
new construction. They did give the borrower 70% of the value of their land.
Mm-hmm.
They already owned the land, had been owning the land for a couple years,
Mm-hmm.
and they were given 70% of the value of that land. Now, the 70% that they were given towards the value of the land could be
Mm-hmm.
applied as a credit towards down payment and closing costs.
Mm-hmm.
This customer had no down payment because they already owned the land. So the
Mm-hmm.
only requirement that they were being asked to come with is the closing costs.
Yes.
And the credit that they were going to be given towards the land, the funds given back on the land could be applied towards the closing cost and or down payment. In this particular instance, the customer was only going to be required to come to the table with $11,000, and they were building a
Yes.
4-unit building. The construction cost is somewhere between 565, 585,000.
Mm-hmm.
The ARV is somewhere around 850,000. But that customer now is going to need to have about 80 to 90,000 in reserves to comfortably move forward in this project. If he would have had to go through a down payment, or if he would have had to be capped at a rate of like 65 or 60%, he was going to have to come with 30% out of his pocket. So he was going to have to come with about 85,000 out of his pocket, plus have closing costs. This
Mm-hmm.
particular instance, he was only covering his closing cost expenses, and with
Mm-hmm.
that also getting a credit. He can come to the table with 11,000, or he can take his 31,000 and use it to start the construction and pay out of
Mm-hmm.
pocket the closing costs. But either way, to get a 90% LTV and not have any build experience, and
Mm-hmm.
your experience, your qualification based on the experience of the general contractor, the builder, is an
Mm-hmm.
excellent opportunity to allow people to get into this business and make a great success.
So basically now this loan program, it's sharing the risk, right? Because it's they are sharing the risk with the not only with the homeowner, with the contractor, because the contractor have a lot of experience, and we prove, right, we have to come in a
Yes,
process that it's not doing by you know, it's doing by the lender. You know, it's a three party. It's not because we say we have the experience. We have to provide all the documents, and it's a back and forward process, right? That we ends
hmm,
with a resolution that they conclude if you have or no the experience, if they approve or
yes,
no. All the lenders are different, and all the lenders have a different process, right? So
yes,
that's very important, because when we start, you know, doing investment, you know, basically there's no other way. If you don't have experience, there's no other way that you can be in new construction investment. So now there is an opportunity, and you know, you have a great partner here like JC.
yes.
We have the experience, and you can have now access to these loan programs. So Yolanda, you you went all over the numbers, and you know that's amazing, because you are the lender, you are the person who provide the fundings, and you are the ones that explain this to the customer, like what means LTV, what means the
Mhm.
90%. So I want to give you another last questions before we go to the next topic. So what is the biggest misunderstanding people have about the cash need to start a new construction project? Because there's a lot of videos, again, there's a lot of videos over there that you don't need the money. I know the answer, but I want to hear from you why people misunderstand about they need to have cash before, you know, before start the construction.
Um, why do they think they don't need to have cash before they start?
Why they need,
Um,
why they misunderstanding about that, why it's so hard to explain the customer they need to have to to get some cash.
I think the reason why it gets hard for the customer to understand because the way the loan terms are offered.
Mm-hmm.
So in new construction, and also even in a fix and flip bridge loan, the construction side is always financed at 100%.
Yes.
Okay. So if you're buying a property and you're doing a new construction build, and it costs you 500,000 to build that new construction, then the
Mm-hmm.
lender's going to lend you the entire 500,000 to build.
Mm-hmm.
However, because they lend you the 500,000 to build, they don't just give you the 500 up
Mm-hmm.
front. What happens
Yes.
is you are paid in what's called draws, which means that you're
Yes.
going to have to do the work and then be refunded for the work that's done once an inspection has cleared that work that has been done. So you have to have capital in order to pay that general contractor to do the
Mm-hmm.
work. Then, once the work is done, you have an inspection. And after that inspection is completed, the lender then pays you based on that invoice a draw, which is called a
Mm-hmm.
draw. However, if you don't have the capital to pay the general contractor to get started, then your money just sits in escrow and you'll never be able to touch it because you're going to have to spend some money in order to
Mm-hmm.
draw down some money.
Yes.
And you need to come up with a good draw system and a good relationship with your general contractor,
Mm-hmm.
whereby you work the work schedule and the progression of the development of the project based
Yes.
on how smoothly your cash flow will grow. So if you know that you are doing the first draw and it's at 30,000 and you've got
Mm-hmm.
30,000 that you paid the general contractor and you're going to get 30,000 back, maybe you'll be working at 30,000 increments. But
Mm-hmm.
however that may be, you need to be prepared to have the capital to put forth first
Mm-hmm.
and then be refunded that capital as you go through the process. So you have to do some good money management and
Yes.
understand the draw process. And you have to work very well with your general contractor on how you maximize the amount of funds that you can pull down from a draw against the work that's being done so that the
Yes.
work continues to be progressive and the cash flow continues to cash flow.
Yes, Yolanda, I'm gonna make a parenthesis right now. So just for context, the edition will be just make a gap here. So so the reason that they have to get money is because they need to pay, in the money could be reimbursement to the homeowner or they will be reimbursement to the contractor. Just to clarify me.
Oh, okay, so it
Be,
depends on the lender
okay.
situation. It depends. Sometimes that payment can be done to the borrower, or
Okay.
sometimes that payment can be done to borrower and
Uh huh.
contractor on paper, or sometimes that payment can be done directly to the general contractor. So
Okay.
when the paperwork is submitted for the draw,
Mm-hmm.
it's going to be in the form of an invoice, and
Okay.
so that invoice is going to get paid according to who it's made out to or who it's made from. That's how that invoice is going to get paid in
Okay.
most situations.
Okay, perfect. So, like, I think what you say was very clear. I'm not gonna push anything else about that. So,
Yeah, I mean, it just depends. It could be paid to the general contractor or it can be paid to the borrower. If the
mm-hmm,
borrower has paid the general contractor,
mm-hmm,
then that check's going to get cut to the borrower.
yes,
If the borrower has not paid the general contractor and the
mm-hmm,
draw request is made, then it gets submitted as an invoice from the general contractor so that those proceeds go directly to the JC.
yes. So, Yolanda, everything that you've been explaining, it's been very helpful. It's a lot of information that you deliver. Before we finish, let's talk about some mistakes, that happen on lending work. So, what are the most common red flags that lenders see in new construction projects? In your experience.
What are some of the red flags that lenders
Yes.
see or that could cause a new construction project to go awry? Um,
Yes. When someone
one
came
of
to
the
you and you are reviewing the papers and you are looking like, okay, there's
uh-huh.
something missing here or this and that. So, what is something that make you, let's say, like, okay, this is not going to happen?
Yes. Okay. Well, the kinds of things that would not make it happen or that would make it difficult for getting a new construction deal done
Mm-hmm.
is a lot in the paperwork that's provided. So with that being said, when the general contractor is being looked at, and he says, yes, I've built this and yes, I've built that, and I
Mm-hmm.
worked on this project and I worked on that project, it is very important that the general contractor can show through permit
Mm-hmm.
or through HUD that they were the actual builder on that particular project. And if you were not through permits, or if you were not through being shown on HUD, and you could have a general contractor agreement, but that's not going to be strong enough to
Mm-hmm.
convince the lender that you were the builder, that the general contractor was the builder. So that is one key thing that causes a lot of deals to go bad, is that the general contractor's evidence to experience and work are not always transparent and evident, or felt to be strong enough for the lender to take that risk on that general contractor for a build. Some of the other things that customers fall into a trap for, and that is a liquidity trap, and that is having enough cash to
Yes.
fulfill your obligations. You really have to be able to understand that you've got to have some upfront cash. Your deal will just be totally unsuccessful if you're not able to keep it cash flowing through the construction stages. And
Mm-hmm.
so you must have capital in order
Yes.
to respond to the draw process, and to keep
Yes.
the cash flow going for the draw process, because
Mm-hmm.
you'll dry out your general contractor, you'll exhaust your own
Mm-hmm.
resources, and you'll have money sitting there that you can't use because you didn't plan and prepare for the draw process effectively.
Mm-hmm.
And so those are some of the kinds of things that a lender will look at. Although you may not be required to have the liquidity, they want to see that you have the liquidity, because they don't want it to be a project that starts and it
And
cannot
never
be
then.
finished.
Yes. So basically, here it's just the right documents. So if someone doesn't bring you the right document, the right
Yes,
paper that that you ask us, then so probably that one of the common red flag, they're just playing. There's no 100% committing to continue with a loan, and they just bouncing, like, see what they can get it right. So
right.
I really understand that. So just to wrap up this episode, Yolanda, one final lesson. If people understood one thing early, what would save them the most time, stress, and money?
If what would be the one thing for them to understand in the early stages that would reduce stress, time, and money?
Yes.
Um, I think if you're doing new construction,
Mm-hmm.
having a good general contractor and
Yes.
having that relationship is very important, because a general contractor is going to be able to understand and interpret architectural drawings and plans. A general contractor that's a builder is going to have good recommendations for architects if one needs them. A general contractor plays a key role in the success of your project. And some of my most successful projects in new construction came from a relationship built between the borrower and the JC on how they were going to cash flow the project. If that is
Yes.
made and understood up front, and you picked a good JC, a general contractor to work with, that's
Mm-hmm.
not out here starving, that's not out here struggling himself to get from point A to point B, that is very important for you to understand when we say pick a good general contractor. You want to pick someone who is fluid, who is moving, who is constantly out here in the marketplace doing business. You don't want them doing a project where they're robbing one project to go finish another project. You don't want to get
Yes.
caught in a conundrum like that. So when
Mm-hmm.
I say your general contractor is important, your general contractor is important. Picking a good general contractor is very key to your success.
Yeah, so I think there's different levels or key roles. Funding is the first thing, because if you don't have funding, nothing happens, and that's I really appreciate having you part of my team. But that's true. Having a good GC, it could be your fail or your success,
It
because
can.
because I have seen many times that people only take the money and they just left the project. So now you are 10, 20,000 off of the budget because you pick up the wrong contractor,
Exactly.
and you run out of the money very easily. So just make sure hiring a contractor that explain you what's the scope of work, how your money is going to be spent during the project, someone that explain you what materials are going going to be installed on your property, right? So you what you need to look, it's not like hire JC because we are the contractor. No, it's just trying to do your work. You need to do your homework and trying to see what's contractor that fit for you, and look at transparency. That's all in construction. So Yolanda, new construction, again, it's not about the money, it's not about the time, it's a
Right.
structure, and it's about the right people. um,
Mm.
so if you get a good financial and it's done right from the very beginning, the project just move forward with confidence, right? So
Yes.
Yolanda, thank you for sharing your knowledge and helping people understand this process better. If you are thinking about building, again, start with education, ask questions, build the right thing, and work with people who understand new construction financial. Thank you for being here with us today, and Andrew from JC Journal Constructions, and I will see you in the next episode.